everyone. So whether you're listening on Spotify or on YouTube, this is part of the Masters of Craft episode, which is where we interview people who are at the top of their game in the industry. So today I've got Si Nathan in, who is a commercial finance expert from Dynamo. Thanks for joining us, Si.
My pleasure. Good being with you today, mate.
Yeah, I'm really interested in what you've got to say, actually, especially as we've discussed, probably the crux of why we're talking has changed a little bit. The landscape's changed a little bit in commercial finance recently, so it'd be good to get your take on it. But talk to us first about your financial services career, how you got to where you are.
So after going to university, I started my career at Barclays. So I was there for about 7 years. In the final 3-4 years, was a relationship manager. So that was really looking after a portfolio of high net worth clients, earning over circa 250,000, and that's dealing with a wide range of finance, small holistic review. So predominantly, of course, on the debt side, mortgages, corporate finance on that side, but also on the depository savings, the kind of full review. From there, then I realised, at Barclays we weren't really servicing the needs of our full clients. So when I was looking at a profile, a lot of our high net worth clients, right, we weren't really having the lending appetite to help them on a wide range of stuff. So at that point, then speaking to a couple of my friends who were in the industry, I realised there was a good opportunity to move in more on the specialist side of it. And then, going there. So then, me and Ying spoke. I approached Ying at that point, and we're living close to Camberley as well. And it was a great opportunity straight away. I think, kind of when I went over to the buy-to-let business, as it was known then, when I first met you, I could see the passion and drive, and that's someone where I wanted to work for. You could see it, and it's been a great opportunity, and I've never looked back since, to be honest with you. So
that's interesting enough, actually. Do you think Ying being at the helm was a big decision in you leaving somewhere like the corporate and going to that? How was that decision for you?
Definitely, it was a big move, for kind of the operation model. How is that set up as opposed to a bank where you've got a lot of comfortability, right? It's quite easy. You're lost in the numbers because there's large base there. Whereas when you're going into a kind of a smaller, I say, brokerage, you're on your own merits, so you have to deliver from day one. But I could also see the passion what Ying had in the business and what he wanted to drive it as. And you can see his own flair and stuff like that. For me, it was a big driver as well, if I'm honest with you. So definitely helped on that side.
Good, that makes sense. And also, just something you touched on there, coming from a relationship management thing. I know people are kind of driven by, we're all driven by sales in the sense that we need to make money, but
yeah, mate, it was the little one. You have these first world problems when working at home.
Yeah, exactly, mate. We got a lot of people working from home with us, so we're used to babies jumping on laps and stuff. And
no, she was just knocking the door. But it's good, mate, always to have that balance. But going back to, I definitely think, when sometimes I look back and reflect on why, I've been able to excel or do how I've performed within this company. I think relationships is key, and being a relationship manager at Barclays, I think cemented that for me. Because at the end of the day, I don't, there's two forms of advisors I really think. One's transactional, who just look at the deal there and then try to move on. But for me, it's all about relationship and understanding what the client's looking to do now and going forward. So if you really
that makes sense. We just did then actually about transactional brokers. Other guys still buying leads after 10 years. You know what I mean? Like,
no, spot on. This is exactly so. When I see that, and you after 3-4 years, you're not growing the back book and actually having referrals. For me, I will say probably 100% of my business is only through referrals. I don't take any leads on through at Dynamo. I don't take any leads on. It's just because of the clients I work with and also, kind of the network. So for me, it's always been important, and I try to, put that message across to my team at Dynamo as well. Relationship is key, the touch points as well, because even though you might have done a mortgage and you put the client on a 5-year fix, that doesn't mean that you can't regularly touch base with them every quarter. There's always something that's changing in their life, right? And if you're at the forefront of anything that they're thinking of, I've always said, I want to be that go-to advisor, even if it's not mortgages and they're looking at car finance. You say, Si, is this something you can help?
There's always somewhere you can have value, isn't there? There's always something you can do. So I think it still blows my mind that people just, I know why, because the money's luring and you kind of, it's fire and forget, but I just think it blows my mind when you see the kind of numbers that you put up in comparison to people, the transactional brokers, and that's the difference. It's the relationship, isn't it? Because the technical side, lots of people can do it.
Yeah, I think that you're right. I think technically, I think a lot of advisors within the industry, you could say at par, right? I think if you're really there, and also I think that's another important factor you got to. I think technically, and also you always have to be willing to learn in this industry. I think you can't get complacent with the time, especially now. Now it's proved it even more in the last couple of weeks with the changing market, pulling rates, the relationships, both sides, as I say to you, it's all about stakeholder management for me, because it's not just about clients, it's about your, lenders, credit managers, business development managers, because they're vital for us, me at the moment, to take that stress off as well, and actually being able to be proactive as well. If you have that relationship, they're more likely to come out to you to say, look, so there's potentially a rate that's getting pulled, speak to your clients, get these applications in now, because potentially a week down the line, that application might not fit due to stress tests or affordability in the background. So it's really important to, more now than ever, just to reach out to like your, the wider broker market, other stakeholders.
That's a good point about your relationships, actually. It's not just your clients, is it? It's everyone that's involved in it. So I do think now, I know you don't do this, I know you're really positive on social media and that kind of thing, but I do see a lot of brokers at the moment loving to vent on there about what's happening. And I just feel like, one, it's not your BDM's fault.
Yeah.
Two, there's not a lot they can do in the market. If you're losing money on something, you've got to pull it. It happens quickly. And I also think it's a certain element of biting hand that feeds you as well.
Look, you hit the nail on the head there. I think it's easy to vent and then put the blame at the foot of a lender. Yes, it's tough, but we also have to appreciate, as you said, at the end of the day, they have to make a commercial decision on something. If the swap rates are going against them, the gilts on 30-year is, getting pricing much higher, they have to pull that product, because they could, if they want to support as much as they can. At the end of the day, they want to return on their money.
They can't do it.
That's the game, right? They want to be lending, because otherwise, for them, at the end of the day, they've got a certain amount of pot that they want to lend out. But it has to be commercial as well, because if it's not profitable and they're lending at a loss, then only for a certain period of time they're going to sustain that, and then they're going to have to stop lending. So I'd rather say, yes, one thing, as brokers, we it'll be nice if we get a little bit more communication.
Yeah.
But I understand the nature of the beast where we're operating at the moment. That might not be possible, because even yesterday, the volatility in the markets dictated that some of the rates were getting pulled, not just in specialist realm.
A couple of rates came back yesterday. A couple of decent ones come back on the market, and then a few got dropped.
A couple have, and then again, that's why I'm, speaking to my guys internally as well, and I'm saying be innovative, offer a product that potentially you weren't thinking of. For example, discounted tracker rates at the moment, that might work out because the stress test works. That maybe allows your client to ride this volatility out for the next year or two, and then reassess the option, right? A lot of our portfolio clients, if you're putting them on 6-7% year rates at the moment, they're not even breaking even at the moment. So if there's a discounted tracker rate that allows them to see that period through, it might help. So
yeah, like you say, if it's only going to be 12 months, 18 months, 24, whatever it is, then I suppose that's where you come through as a knowledgeable broker. I think that's the difference, because when the guy that knows their product but doesn't really understand the market comes in, they don't fully get that. I don't think it's true advice. It's like, oh shit, this is what I can do now, as opposed to let's look at your 5-year, let's look at your 10-year, and actually work out what's going to benefit you in the long run.
Spot on. I think that's where, again, trying to differentiate from a transactional to a relationship. Because if you're transactional, you're seeing that client as that one data. You've done a 2-year or 5-year all your time for the last 2-3 years, because the market's been. You have to be, quite generous as a broker, because it's been quite simple. We've had a wide range of lenders trying to, offer their propositions. So it's been kind of strong for us to be able to pick and choose where we want it to be. So sitting on a 5-year profile to get that 75% loan to value has been fairly simple. Now, really, I actually think, I was speaking to my sales director yesterday in AMD, and I think it's a perfect opportunity for a lot of the guys actually to hone their skills in this market, because actually, through adversity, it allows you to actually self-reflect and actually, make yourself better, right? So understanding propositions, what's out there, but also working yourself, because, you really have to go out there and really work for what you're doing at the moment.
Right, working on yourself, that's exactly it, just getting better at your job. Someone said to me the other day, actually, they said, I don't think it's a very good time to join the market. I said, it's a great time to join. You've got no pressures of a big pipeline. And also, if you learn now, you'll smash it in 2 years' time. Like, don't do it when it's easy, do it when it's hard, and then learn the actual, how difficult this game is. It gives you a more realistic view of what your future looks like, as opposed to those nice, easy couple of years when everyone was doing okay.
Of course, that's it. There's a lot of pressure points, don't get me wrong, and I do sometimes feel for the new advisors coming in, especially if you're starting within a small brokerage. I think it's very tough. And that's where, again, I'll put something on LinkedIn. It's about the broker community and actually the wider community as such supporting each other. And I have that, it's reciprocal. We speak a lot, not just because I work at Dynamo. There's other brokers, brokers at other brokerage, which I always have regular communication with, because I think it's important. Because I think we have to realize, we sometimes feel we're just going through it by ourselves, but actually all our clients are going through the same problems. All the brokers are going through it. Solicitors, surveyors, accountants, estate agents. So it's actually, we're all in it together, right? You know, even the side of the recruitment side, you know, we're all in it together. So it's how we work together to, you know, find hopefully a solution, or actually just say actually something needs to change and offer a positive solution, not just a negative one. Because it's, as you said, you know, it's easy to go on LinkedIn or go on a social media platform and, you know, barrage someone or put a blame on someone. But actually, how can we then, you know, look outside the box and say, this is happening, how can we best move forward? So
yeah, that makes complete sense. And also, I do find like the broker community, I mean, I know you're really open with speaking to other brokers stuff, but some of them are quite insular in the sense that you don't really know what's going on with other people's businesses.
Yeah.
We're very privileged in the sense that we look in people's businesses all the time, so we can see it. We can see, don't panic. You know, these are doing this, people are doing this, it's fine. Everyone's under the same pressure. But I suppose unless you're speaking to other people in your industry, you don't really get that opportunity to actually go, shit, is this us or is this everyone? Like, see, you need to have that kind of, again, relationship building, isn't it, right, amongst other brokers as well.
Because I think that's where people need to change that misconception of, you know, we're fighting against each other, or, you know, if you might look in less in a certain way because you're saying the business are coming in, but actually, you know, if you be truthful and honest, naturally, I think across the board, you'll feel that other brokers are going through the same pain, right? They've got the same pressure points, same bottlenecks that you're facing. So actually, it's a sense of relief when I speak to some of the guys. You know, of course, we're fortunate, you know, we are doing business in certain metrics, but at the end of the day, we're also going through the same problems. You know, lenders are pulling.
Exactly the same problems. We work on a bigger scale, but it's the same issue, isn't it?
Exactly. So I've always said, you know, we're very fortunate, I think, as a broker community, that, you know, we can speak to each other, and, you know, hopefully that's why I think more people should reach out, because especially when you're in a one-man, two-man thing, it is very tough out there. So I'm fortunate, you know, working for a, you know, big company like Dynamo, you know, working in the office 3 days a week or 2 days at home, I've still got that touch point with many, you know, kind of guys in the office. But it's definitely something I would say, you know, it's important to reach out.
Good. So let's talk about that actually. So I don't want to be negative about what's happening at the moment. We all know it's a little bit tougher. So you've obviously got a team that you're working with who are going to be more junior than you. So how do you go about motivating them? Is it a different motivation than it is in the good times? How do you go about motivating them at the moment, just to keep the productivity levels up?
So that's a very good question. So initially, I think, again, looking at it, right, when after COVID started, there's two different kind of pressure points that I've seen. So when it came, it was the volume that these guys were dealing with first. Even myself, when my first, you know, kind of junior guys started, how do they keep up with the volume and the numbers to help clients in that pace and help, you know, maximize and also help, you know, deliver the outcomes? I think now it's slightly changed, especially after the mini budget. It's delivering outcomes which unfortunately are sometimes not positive for our clients, and being able to deal with that emotionally, right? Because sometimes you become emotionally attached to the decision. But that's the hardest part, I think, for a lot of my guys on my team, because they personally take a hit on, or say, you know, I can't deliver now, you know, the thing. So I'd say, you know, the first week was tough. I think even for myself as a manager, as an advisor, to be able to do that. But then I said, you know, I had to take a couple of days out myself, probably yourself, and reflect and see what actually the market and how we best approach it. So I took, you know, we've spoken our team meeting, and I said, actually, this is a great opportunity for you to actually cement your relationship with your clients. Because if you can't help, justify reason, give them an understanding of the market, where the market is. If it's a short-term, you know, problem, or you can understand actually if they did certain ways, you know, budget, or, you know, kind of look at it on a longer-term plan, can they just ride the short-term wave out? And I think the guys are starting to understand that a little bit more, and, you know, it's really being proactive with our clients now. You know, it's not just looking at your book for the next 3 months, 6 months, it's 12 months. It's forward planning that as well, and really cementing that relationship, because some of our clients won't realize there's going to be a problem till they, you know, come to that fixed rate that comes to an end within a month. So really get to know your back book, get to know your clients, and really, you know, go out there.
Whereas as well, like, you're cementing the relationship at this time, and that you go through something, like you said, it's quite emotional for them. You're kind of part-time advisor, part-time therapist for a lot of people at the moment, same as we are in recruitment. But they remember that, don't they? They remember when it's easy.
Because that's the thing, right? I think, as we know, with anything, you know, it's easy to deliver a positive message. I think everyone loves to pick up a phone and say, oh, great, I've got you the mortgage offer, here it is, and everyone wants to take that praise. But actually being able to deliver that negative message and then guide them through that journey is more vital and key. Because sometimes it's easy just to send that email to say, unfortunately I can't help. And if you have to put yourself on the other side as a client, right? Because
Yeah,
we
you're
all
not receiving that deal from an email. It needs to be.
don't want to hear that from an email. So I always press to my guys. First thing you do, you should always pick up the phone to the client, be empathetic, and say, unfortunately, we can't help. But actually, before picking up that phone, you should always have a solution. Because don't pick up the phone with a problem and then leave them to fester with that. So you always go to them and say, unfortunately, it was for this reason we couldn't help. However, I found this solution I think we should go with. It's because of this. It might not help to get maybe the max level we need, but it gives you a solution to get off the kind of issue that we may be facing, or to help you acquire that kind of asset now. So,
in your view of that market, I know you've got a lot of portfolio clients and that kind of thing, and how do I word it properly? How is it for them? Because obviously they've taken a big chunk out their margins. They need to remortgage at the moment. It's just the nature of the beast. How do you deal with that? You just have to go, these are the facts. These are the
So the reality of it is, Marcus, is we saw this coming about a year ago, if I'm honest with you. Not as drastic as this rate. So we've done a lot of portfolio restructuring across the year. So we put equity money on the side to acquire property. So a lot of my portfolio clients have seen this as an opportunity, because this is the first time, probably in 2-3 years, they have an opportunity to actually negotiate the price down, because it was a seller's market previously, right? So there wasn't, best and final bids, or you come to the market, it's going 20-30 grand of offer, there's 50 people viewing the property. So a lot of my portfolio clients were looking at it. They were still acquiring assets, don't get me wrong, because that's the nature of the beast, right? You need to acquire to grow the portfolio and then grow where you are market share. But now when I'm speaking to them, actually, I'm actually getting loads more inquiries in, because now they are actually getting a discount instead of paying a premium for it. So if the number's still working, of course, the base rate and the interest rate that you're paying, now we're looking at, if it's an investment property, maybe 6-7% on a 5-year fee. But again, it's understanding the market, dynamics, because can you let that work to your advantage? Is there an opportunity now, potentially auction now?
I suppose getting it cheaper and getting the property cheaper. And
exactly, there is opportunities out there now. There's going to be more to motivate sellers now. Some people that have had 1 or 2 investment properties, they've had it for 20-30 years. Do they really want to now keep it? They might think this is the best opportunity just to get out of it. They've made a nice profit and then relax. So there's going to be, I think, much more opportunities now for investors, but it's just the right opportunity. I think it's just sitting back, doing the numbers, making sure if there is a tough period, can you ride that storm out? And then think of the long term, because short to medium term, yes, we might go through some pain, but we know property, capital appreciation, long-term investment, can it give you, kind of income as well for your pension? It does all of that. So for me, when I'm speaking to my kind of portfolio clients, of course, it's slightly tough at the moment, because I do a lot of, high value transactions across the south. So the rental coverage sometimes doesn't stack up there. But then some lenders are becoming a bit more innovative with their products as well. As I said to you, with the discount tracker rates, it does start to help to, kind of bridge that gap, but it's not fully working at the moment. I still think, there is some proposition work that the lenders are looking at in the background, and I think
I was going to say, they are working on this, aren't they? It's not like they don't want to lend. They've got to,
they have to be innovative, but as you said as well, but it has to get the pricing right and also the risk appetite right as well, because they bring this product out, they just want to ensure 2-5 years down the line, we're not kicking that can down the road and we're going to cause a problem. So it's just, how do we do it? We have to adjust to the new normal. I don't think we're going to go back to where interest rates are 1 or 2%. Can the clients and the debt service still be manageable, right, at that loan size is where I guess a lot of these lenders are doing, and it's the right thing to do.
Good, that makes sense. And something we touched on before we start recording, but I do think this is an opportunity, as you just said, Dan, it's an opportunity for people to do better, work harder. Do you think it also, people I'm speaking to, it tends to find, without being disparaging to anyone, it gives some people excuses? There seems to be that it gives, like, perhaps weak people or people that aren't as productive a really good out because it's just harder.
Look, there's always 2 types of people. One person will take that news and deliver it in a certain way, and one person who will take it inside and make the most of a negative situation. Yes, it's a very tough market, and there's no way denying that, no way getting away from it. It's very emotionally draining at the moment, mentally and physically sometimes as well, because you're going through it, rate pools left, right, centre. But as you hit the nail on the head before, Marcus, it's just, this is a perfect time actually to add value to your clients. Let them know why they're actually paying for a service and what you're doing. This is why we've said, broker, why to use a broker, right? Is in these situations we really come to own. I'll give an example again, you know, not going into too much, but a client of ours, you know, has used other brokers before, came to myself, you know, they wanted to go to one high street bank, they want 5 products. Again, that high street bank said it's going to be a month before they could see them to do a product transfer. They had to swap, pay an early payment charge.
And those rates are only going one way in next month.
It's gone up twice. So when I looked at the calculation, it was, you know, a couple of million. It's in the tens of thousands that we saved that client just because of having that relationship. Now you can see, you know, from there and then going forward, now that client is always going to be, you know, responsive to us, right? Because we are proactive what we do. And that's what going back to what you said, you know, you could take in the negative way, and, you know, when you're speaking to clients, say, oh, unfortunately, I can't help you at the moment. There's nothing to do. The market's really bad, you know, and then unfortunately, that's just going to personify in the client's mind of you, and it's just going to cause mass hysteria, and everyone's going to start thinking, or you deliver it the other way.
Emotion you get with someone, isn't it? You know, like they say they don't remember what you said, but they remember how you made them feel.
Exactly.
If you ignore someone, then that's how you've made them feel. That's that reassuring feeling they got the next time they speak to you. If you've panicked someone, then that's the feeling.
Because at the end of the day, you know, you're there to calm them as well. You know, this is our job, right? We need to take all the information we have from all external parties, from our lending partners, from what we know from the market, and that's why it's important to be, you know, up to date with the market knowledge. You know, keep your reading, where your understanding of it, what the Bank of England's doing, and money deposit. All of that is vital, you know, kind of current market, what we do. So having all of that information as an arsenal to yourself, and then being able to relay that in a way to your client that could be beneficial, and then providing a solution is key. And as you said, you know, for my guys, you know, I'm the busiest I've been. You know, it's not, the market has been slowing down, but at the end of the day, a lot of our clients need us more than ever, because this is when, you know, we really come into our own, because at the moment it's the hardest point, right? A lot of people are looking at their affordable, you know, kind of, is it affordable, their monthly payments? They're looking at their rentals and saying, actually, is it yielding? And it's having an honest conversation and saying, you know, what do you need to put in place for it to help? And actually, can we do something at the moment? Or do you maybe sit tight because actually, maybe, you know, do you wait for a month for the market to settle down and then we refinance? So it's really gauging, you know, what the client's risk appetite is as well, and how you can, like, you know, marry a solution to that.
Yeah, makes sense. In regards to kind of what you do personally, now I know you do big numbers. Like I don't think there's anyone that touches you around that kind of that area. So what else separates you? Obviously, the relationship manager is important. What do you think are some of the game changers that you've perhaps picked up? I know you have to just look at yourself and yeah, it's hard to talk about yourself in that kind of way, but what do you think separates you from the kind of the, you know, the 100 grand a year guys and those guys? What is it that gives you that extra level of what you've got?
Like this is a tough question, Mark. As you say, you know, it's kind of hard to self-reflect because what you do day to day. For me, fundamentally, it's that relationship element for me. I've always said to the guys, you know, my team, I said, never look at a client as a number or anything. It's a relationship, you know. This is, you know, unfortunately, like the old school bank mentality, you know, where you've got such a wide range of clients that they then become a number. For me, it's always about touch. And I think, you know, as I said to you, I always want to be their go-to advisor with anything. So for that, I always cement, you know, relationship touch points. It's important to be regular to contact with your clients. And I think education, knowledge, you know, I was always willing to learn, and it's via, you know, if that's from our, you know, kind of the lenders on the proposition side, the market, macro, microeconomics, anything like that, and also from my broker colleagues, right? Even if that's at Dynamo or the wider broker community, if there's something I can learn, I'm happy to look silly. If I feel like I don't know the question, I'd rather ask, because if that helps me help my client, great. And that's why I think, I don't know, for me, and then of course, you know, like, I think kind of the resilience as well. I think you need to, if you have a knockdown, you need to go in and be able to, you know, forward think, look outside the box and offer a solution. I think you have to be, you know, and for me, I'm quite passionate as well, as you probably know, you know, I'm driven.
That's the difference. You love it. You love helping people. You love the business. It just, it goes through.
That maybe also helps answer that question, you know, why is it? Because I actually love what I do. You know, I got into, you know, kind of the broker side. I've been in finance. I really do love what I'm doing. I don't just say it, you know, just on camera or just to people. This is a real passion of mine. So when I speak to people, you know, I look forward to Mondays. It's not because of like, here we go again, I open email. I really look forward to, you know, speaking to my clients on the Monday and that journey throughout. And the Friday comes and I don't think, oh, here we go again. Yes, it's tough at the moment, don't get me wrong. Some days I'm happy just completely switch off. But, you know, I really do love my job and, you know, passion for it, and kind of the mortgage market, growing that relationship with, you know, everyone within that as well. So for me, I think that helps as well, because if you love what you do, that comes across to your clients. they can see the passion and the drive that you do, and they know that you're on that journey with them to help them deliver their outcome. So that's another thing, actually. You know, for me, again, this is what I mean when I separate a transactional to relationship. Some of the guys will look at a mortgage that the client sent. They'll look at that, that's the opportunity, and then think about something else. Actually, if you delve in a little bit deeper, you understand, you know, if these clients have got a lot more going on in the background, right? So really doing a full holistic review of the portfolio and then putting a plan in place. Actually, I can see this is coming in 6, 9 months, 4 months. If it's a portfolio landlord, especially, you have to understand a lot of these guys, you know, have got other kind of finance needs when it comes to auction, because if they've suddenly gone from 2 to 3 to 4 properties, I bet you my money that they are doing renovations in the background. They're probably
something's going on,
You know what I'm trying to say? Or they're using their cash, which is not being used in the right way, right? If you could use that to move on to 2, 3 projects. So it's really understanding the market and the kind of propositions out there to help your clients, and then actually educating them, upskilling them. Because till you provide a solution or let them know about a solution, a lot of your clients might not know that's actually even out there. So that's where I think, you know, some of the times, I actually do win business and actually, you know, attract new clients, because I could offer them a proposition or an understanding on something they didn't think about, and they say, actually, sorry, that's actually a good point.
That's part of being proactive, isn't it? That's the productivity thing that we talked about, that some people just feel like they could just roll over and, oh, the market's hard, I might not bother. Like, you've got to do double the amount of calls, you've got to get into people's heads and got to delve deeper, haven't you? It's just, that is one of the separating game changers, I think.
Indeed, that's exactly it. You know, you have to delve deeper, you have to have that understanding, and then it's reciprocal, right? If they understand you've taken that information and done something with it, and then providing solutions, then they're more happy. And it's also, and don't be shy, you know, to ask for referrals in this business.
Do you think that's another thing, actually? Do you think people, especially maybe the next generation coming through, who aren't used to that kind of, maybe like chatting in the pub type thing, they just, everything's on an email, everything's on social media, they're not really good at knockbacks. Do you think that's reflecting in people being afraid to maybe pick up the phone? Do you think it, or like they don't want to give bad news and that kind of thing? I think it's just maybe.
I honestly see that, and when I see, you know, across the board, I'm not just talking our industry, I see a lot of people try to deliver that over, you know, or emails and stuff. For me,
don't deliver bad news. Don't even give good news on an email. Don't send an email.
When I see, you know, even with my guys, and that's why I always say, if it's good news, bad news, any news, pick up your phone to your client. You know, it's important to have that touch point, because that, you know, you'll be.
Also, you're never going to pick up any extra information from an email.
Exactly.
You're never going to get a sentence that sparks off in your head. You're not going to get it.
You know, for me as well, why sometimes I avoid email, because actually what the message trying to convey to the client might come across the wrong way as well, especially if it's
tone, can you? You can't
say tone, right? So when it comes across like that, especially when you've had a hard day and you're trying to deliver that message, it's thin. But actually, if you're on the phone, it's more empathetic, right? They could hear it in your voice. But you fought the battle for them. Unfortunately, you couldn't deliver that outcome, but actually they appreciate you taking the time out to call them to say, look, Marcus, unfortunately, I couldn't help from the situation. The reason why was this, but I am looking at this other avenue, and let's go run with this, you know, and this is why. So I will appreciate you doing that more than, you know, you sending an email, unfortunately, Marcus, I can't help you with this, that I am looking at something, you know, it just becomes things. So I do think in this day and age, some people do shy away to picking up the phone, but the only way you will ever grow and build a strong relationship with your clients is, you know, having that strong interaction daily. And then
I do get it as well, because like I said, we're a different generation from the ones that are coming through, but at the same time, awkward conversations are awkward.
Yeah,
but they just get easier in time, because you know you've got to do it, and it does, like you said, it does solidify a relationship over chucking out an email, because you're too worried about the reaction.
Exactly. But it's again, you know, why the other thing that you did say, I think why you say, you know, why I've grown relationships with my clients, why it's 100% referrals, I don't take leads on, is that point again. You know, they know I'm approachable, I'm always on contact on phone. I'm not going to just send them an email to say, you know, this is it. It's that touch point. So, you know, they're comfortable to kind of refer, you know, their close family, friends, their high net worth client, you know, kind of colleagues as well, their business partners, because they know I will treat them the same as I treat, you know, them at present.
That's good. I know you've kind of touched on referrals then, but let's talk about that in a bit more in regards to like new guys into the industry, maybe a bit afraid of asking for referrals because you're doing a little job for someone, and it's kind of this weird relationship you've got at the beginning with someone, isn't it? That you're kind of an underling, if you like. So talk to me about how you built out the referral database, and is it just a confidence thing, or is it just a genuine, I want to help you, I want to help your friends? How do you go about sort of starting that and continuing it through your career?
So I think the first 2 years, I think it's easy. So especially if you work in, Dynamo or another big brokerage or any brokerage where you're sitting with a lot of experienced guys, it's easy to forget the hard work they've put in to get to that point, if that makes sense. I think people want more than the glory, but don't sometimes want to put the graft in. So this has only happened 2-3 years of really cementing that relationship with a lot of my clients. I've onboarded just the first year, I took on a lot of new clients, and from there I built that relationship. So it's really the touch points again we go back to. So if you're helping your client, if you're delivering that, there's certain touch points you should be asking potentially for a referral and seeing if we can help other clients, their kind of wider community. When
you train your guys in that as to when to do the touch points, when to do the referral touch points?
Yeah, I do try to. For me, it's you're always out there. As I said to you, if you've got that kind of relationship, you will never be shy to ask them, right? But if it's transactional and you've just, again, going back to that word, is if you're transactional and you're just helping them on, then all they see is you've just done one thing for them. You've sourced the mortgage, but you've handed them off. You've not spoken to them throughout the process then. And then at the end, when it completes, you ask them to do something. No one's going to do that for you because you're not memorable.
You send in an email, got any work out who you refer me to?
No, I'm going to say, oh, congrats on your, you've just completed. Also, can you just refer me to your family and friends? For me, I will never do that because, first of all, that's a little bit, cringy for myself, and it doesn't, it's not in my motto. So throughout the process, naturally, I think what's happened is where my clients see, I will deliver and I'll keep to my promises. If I can't do something, I'll be open and honest from the first time, from understanding what they need. And if that's something I don't think is right for them, I will also call it out and say, actually, I don't think this property fits in your profile, what you're trying to do, or this commercial asset. Do you want to reevaluate it? Look at with your professional team if it's a new development site, and look at the numbers. For me, it's not about doing that deal there and there, because if you're thinking about doing a deal because of monetary gain, then you're going to lose a long-term relationship. If you truly advise your clients on what the right thing for them is, even if it means that you're missing out on that deal, then they will always buy into you with that trust element from that day one as bought, because you've told them the right thing. They know, we're here to advise, right? We want to do, finance for them, but actually telling them it's not the right thing at that moment will, that trust element is bought. So I think
as well, like you just touched on there, if it's a transactional or a long-term, if you've got your long-term plan, you're talking about, we're in this industry a long time. I'm thinking 20 years down the line. I think it takes the pressure off you a little bit about these little problem times, because it's a long game. Like, we might not make money next week, but you make money the week after if you keep following it. But I think if you're doing transactional, you do have that, you're living by the day panic. I think you do a bit more if you're not thinking long term.
That's what differentiates the brokers at the moment. So the transactional guys are stressed, worried, they're just thinking about now, they're not getting the deal done. But the long-term relationship, longevity guys who understand actually this is a long game, and the clients, you're there on their journey, they understand is actually helping them, as you said, a shoulder to cry on probably at the moment, being there as a mentor and just really giving them a bit of knowledge of the market at the moment, and then helping them understand, this is potentially a short-term blip. We've been there with COVID, we've been there for other crashes, but it's quite cyclical. Of course, kind of the pressure and how ferocious it's been in the short term in 1 or 2 weeks, it has been a lot. But we have to, that's why I step back sometimes and say, history has taught us COVID, the same thing. When we went into lockdown, we thought it's Armageddon there financially, everything's going to cripple.
It lasted 2 months.
Yeah, last 2 months, right? But at that point, when you're going through it, that pressure cove, it feels like a lot, right? You forget, like you have to step back and reflect. And this is what I'm saying to a lot of my clients now. If they're coming to me, the main thing I'm doing, yes, we are doing business, but if it's not the right thing at the moment, and if it doesn't fit, I'm saying, let's just hold off for a moment. Let's not panic, because market, as you said earlier on markets, lenders are coming back, right? With new propositions, new rates. Yeah. High Street are reducing some of the rates, some of them are increasing just because of pricing matrix, what they need to do in the back book to cover themselves. So it's important to understand, the lie of the land might change in a month's time. In 2 weeks, we've seen the upheaval how it's had. So then again, looking at that, so if you're not transactional, you're more than confident to say to your client, look, let's just hold off for a minute and wait. If you're transactional, you want to try to get that deal done. You will lose that client, because in a month's time, I'm not saying it will change, but then if you go back and say, sorry, how come we didn't have this conversation? Then the buck lies with yourself, right? So that's why, again, if you think you're going to be in it for the long game, 10, 5, 20 years, you will always have that kind of, mentality.
Yeah, better aspect on it. I just think it makes it easier. I think it's easier for your, how you deal with your customers. Everything becomes simpler because it doesn't have to be tomorrow, but you will get it. You just get that long term.
No, sorry, man. I'm just saying that goes back to the referrals bit. Where how I've got to up to 100% referrals and not taking on kind of generation leads from internally or external sources. It's because of that. Because you go from transactional relationship, and then also I always say to a lot of my kind of internal guys, treat every client as you would treat your high net worth client. To any client, treat everyone with full respect. Because actually, some of my big portfolio clients, circa 80 million plus, they've come from the one client who's done the one with portfolio, one refinance, sorry, and that's me helping. But actually, having that relationship and that trust element, you never know what that one individual person knows. Once they trust you and fully, they might see someone at the squash court, at the pub, at the gym.
Turns out they've got 80 mil they need to remortgage, and
and then suddenly it's a snowball effect. And actually, some of my biggest clients have come from, what the person who's just done one mortgage with myself, and then suddenly,
just doing an amazing job for everyone. Don't look at it as.
That's what I always say. Never, especially when you're. I'm not saying when you're starting out, it's different to when you're, hard and seasoned thing. But I think a lot of the guys, when they're first starting out, they're always looking at someone who's doing really well. And that's going back to the point of actually you have to understand, the kind of service and gratitude that that the graft as well. It's a real graft out there. And I said to my guys, I did really work hard. When you come in, you can't treat it as like a 9 to 5 business. Do
you think that? Do you think people look at your numbers and go, "It's easy for you because you've been in it a long time"? Because I know guys that have been in it longer than you that don't do what you do. So you don't join, do you? You don't. When you join the industry, you just think, well, that of course he's doing all right. He doesn't have to work hard now. He gets referrals, but they don't see that you have to work hard with everyone, and you have to put in the graft. I suppose you don't. You have to tell them that.
You know what? I see it in two fronts, because sometimes I hear it and I have open up honest conversations with a couple of my guys, right? Because they come out maybe out of industry, where I come from banking. Yes, it does give me that, added advantage for the relationship side, and this guys that relationship. But also, they do, you've got referrals, but the referrals come from the hard work and graft. That didn't come out of nowhere. Clients won't refer other people without you delivering right and on your promise. Actually, that graft came in. So I think in our industry, you have to realize, the first 2-3 years, it's a real graft, to really actually grow your back book, to grow the relationship all over. It could be with solicitors, with your valuers, with kind of lenders, with your clients, with everyone. Actually, it's really important to cement that, because at the end of the day, everyone's working to that end goal, of actually completing on the transaction. So within that, so I think this is what people forget. And I, as Marcus, like yourself, I proactively go out there to kind of strengthen and grow my relationship with all key stakeholders, because I think it's vital, it's in the market that we operate in, that we have those touch points, and if we need to call upon them, that we can and we can deliver. So, and again, that's why it goes to, being able to then, get these referrals.
Yeah, amazing. That does make sense. I've kept you for ages. I really appreciate your time. So I normally just, for one last question, and to be fair, you've covered loads of these, so hopefully this does sort of resonate with new brokers and old brokers as well, just ones that aren't doing as much business. If there's one thing that you could kind of, if someone's new into the industry and there's one thing that you could teach them or tell them, or say, if I did this from the beginning, what would it be?
It's a tough one. I'll say be a sponge. It's hard because you're in a smaller brokerage, reach out and then use your networks and understand it. And there's two things I'll say. Be a sponge of people around you, see what they're doing, take the best habits and practices from everyone, because everyone has different practices or habits that works well for them, and then try to, implement that in yourself. The second one is knowledge. Knowledge has always been key for me. I've always said to my guys, personal self-development is the only way that you'll always be, because you are up normally against another broker in the industry. It's not competition, but that's the natural reality of where we are in life. You have to be able to impart a little bit of knowledge for your client to buy into and say, this is my advisor that I can trust. I could deliver for me to go and do my day-to-day function of running a business or my portfolio, and he will deliver on this side, right? You want to be that go. The only way I've said to my guys is knowledge. Knowledge is key in our industry. So first, immerse yourself within the industry, understand it, take some time really to get to know the market, all other factors. And the second, be a sponge. Learn from all your peers around you, and don't be shy to, sometimes look a fool. If you don't know something, be honest with yourself and then actually try to learn from there. So they're the real, takes, I'll say, from my side.
Yeah, amazing. That makes sense. And like I said, hopefully it does resonate with young brokers because they can learn a lot from you. And that's brilliant. That's all the questions we've got. I appreciate your time today. To anyone listening, like I said, on YouTube or Spotify, if you do have any questions for Si, of course, you can connect to him on any social media or drop me a message and I'm happy to pass it on, because Si is one of the good guys in the industry who is happy to, you know, part on that knowledge to the next group of advisors. So thank you very much for that, mate. I appreciate it, and I'll speak to you soon.
Thank you for having me on as well. Really.
Cheers, mate.
Thank you, Marcus.
Cheers. I'll speak to you later.
Yeah. Bye-bye.